Hello my dear listeners, in this video today I will talk about gold and silver spot, dollar index and the stock market. Please do not consider anything I'm going to say in this video as investment advice. It's for educational purpose only, and please like the video if you find this information relevant. So, well, the fundamentals right now for the gold and silver spot are well, they very strong because we have inflation fear, we have instability, we have a very good situation on CLT, the situation with the silver shorts, especially commercials and the banks are has the very low position in silver shorts, which is usually precursor of the spot paper spot rallies. It's not as low in gold, but it's, at least for silver it is. Now the doesn't mean that the price could not go lower, because the markets, we are in a bear market, and we are far, well, we are far away, in my opinion, from the lows. So because there is so much fear, and this fear of especially of the falling earnings, and the recession have not been priced. You know, we have a very rosy forecasts for the earnings for the next quarters, and even for the coming quarters. And we have company after company now falling sharply after, you know, the earnings reports only for the second quarter. But imagine what's going to happen for the third quarter. So this has been price of the market. I'm saying this because the market could take down easily the paper spot price in gold and silver. Now the dollar index, the other one that is influencing strongly the spot price. Well, because you have to understand that this index, it's you have a euro, you have a Japanese yen, and you have a British pound against the dollar. So let's analyze three of them quickly. Okay, so the euro, we have a disastrous economy, and you know, there is a crisis, political crisis, debt crisis, economic crisis, and everything is energy crisis. Everything just got worse after the Nord Stream pipeline gets sabotaged. So we have more bad news to come for the euro. How it's going to strengthen against the dollar, I don't see that's happening. This Japanese yen, it's a little bit better, but you know, they have so bigger debt, they cannot well, they have dollar reserves that they can sell to do interventions, which they say they can do. But how it's gonna offset their falling economy? In Japanese yen, it's not a reserve currency as the euro and the American dollar. So I don't see the yen striking too much here. The third one is the British pound, and now the government has to bail out you know, the pension funds, because the interest rates are rising and the bond portfolio of the pension funds are falling, and they borrow against them. And since their bond portfolio is falling, they're getting margin calls on their debt. So the British government has to step in and avoid a panic sale for the pension funds of their bond portfolio at the very low level. So they have to print money, and so and also the Great Britain, it's in the same boat as all the European countries. They are not, you know, they are not much different. Okay, so the stock market here, well, I said that the earnings recession have not been pricey yet, and I just watched the today video, like the, you know, the analysts on the CNBC and the major news. Everything is rosy. The forecasts are very optimistic going forward. Nothing is for the companies. It's been a pricey yet. So we may, and the Federal Reserve meeting, when they're going to pronounce on their well, if they're gonna rise or keep the same interest rates or the low interest rates, it's we have 2 months. So we have 2 months, and lots of can happen, like in this time. So on a short time, this could create a down pressure, the down pressure risk from the stock market on the gold and silver prices. Okay, so my sympathies are also for the people in Europe for their dire situation. We are we are much better in Canada compared to Europe, who is take hostage of this conflict. This war going on, the civil war between Russia and Ukraine, or really it's a war between the United States and Russia. Thanks for watching, and please comment.